All right, Module 9. Before we move on to Module 9, any questions on Module 8, or give me a smiley if you are all happy about this? Oh, I hate that I'm missing these little comments because I'm just seeing stuff in there and I'm seeing Volusia County and I don't know what's going on. I feel left out. All right, Module 9, you learned about financial management. There's 3 components to successful money management. You've got your financial records, you've got personal financial statements, and you've got budgeting. And we're going to go over these a little more in detail. Financial records. Because we've only got about 10 minutes left, I'm going to go ahead and blow through this and tell you what these are. Different financial records that you have. Bank statements. If you have a bank account, every month you will get a bank statement. Sometimes they're in paper, sometimes they're on the computer. Now a lot of them are going paperless. So you will get bank statements. It's going to tell you how much money you've spent throughout the month, any interest that you've earned, different things like that. Receipts. Hold on to those receipts. One problem that we ran into, my kids like Skull Candy headphones. I did not realize that Skull Candy headphones have lifetime warranties, and we threw the receipt out, and then my daughter's headphones broke, and we were out of luck because we did not save the receipt. When it came time to get my son a new pair, we made sure that we held on to the receipt, and when his broke, within 2 weeks he had a new pair of headphones. So very important to hold on to your receipts. Yes, I know they break a lot. Skull Candy, I would think, would not break, but apparently they do break a lot. Investment information. So yes, they're a type of headphones. It's a brand. Investment information. Any investments that you have, you'll get statements every month, every year, whatever, and you want to hold on to those. It really depends on the type of investments. Some of my investments, I get statements quarterly. Some I get once a year. Credit card bills, again, these could be paperless, but you want to keep those on record. If you're getting them online, you want to make sure that you keep them in a PDF file on your computer. Any insurance policies that you have, you want to keep those policies in a safe place so that if it comes time to collect on an insurance policy that you have, you know exactly what's going to be covered. Pay stubs. It's very good to keep your pay stubs when you have a job. Keep them for several months, even the full year. When it comes time to file your taxes, it's good to have those pay stubs. Property titles. This could be the deed to your house, the car titles, different things like that, very important to keep. And then tax forms. When you file your taxes each year, you want to save those for several years so that you can look back on them. A lot of times you may need to look back on them. Yes, you're absolutely right. I forgot about that. A lot of companies now, you don't get a paper form of a pay stub. It's actually online. And so you would want to, a lot of times it's kept for you where you can go onto a website and you can pull it up. That's how ours are. But if not, if it's something that gets mailed to you or emailed to you, you want to make sure that you keep that. I really don't like to hold on to a lot of papers either, and a great option for that is to scan them into your computer and save them on the computer. But you want to be careful of that because you could also lose your computer. We're going to get into that also. Why do you want to keep your financial records organized? This is a question on one of your assessments. Some different reasons why we want to keep our financial records organized would be to pay your bills. If you have bills coming in, credit card bills coming in, 902, absolutely. If you have those bills coming in and you don't know what you owe, how are you going to pay your bills on time? You start not paying your bills on time, you're going to start having some issues. Your electricity is going to get turned off, your phone's going to get shut off. So you want to make sure that you know what you owe and when it's due. Filing your taxes, you will need things like receipts, pay stubs, different things like that. Investment statements, bank statements. If you don't have these, you could get into some trouble when you file your taxes because if you get audited, they want to see this information in order to know that you were telling the truth. Also, you may miss some deductions if you don't have those receipts and different things, and then you can't deduct those. Measuring your financial progress, those investment statements you want to see. Are your investments going up or are they going down? It's kind of right here too, tracking your investments. And then just like I said with the Skull Candy, this darn Skull Candy headphones, filing your warranty claims. Most warranties are going to require that you have that receipt. And a lot of times they're not going to take a scanned version of it. A lot of times they want the original receipt. So if you're going into a store or something like that. So make sure that you hold on to those. Okay, where do you keep them? This is what I was talking about, scanning them into the computer. Here's some different places you can keep them. You can keep them in a home file, which, you know, I forget who just put it up there. I think it was Jonathan said he doesn't like to keep papers around. I don't either, but I do. I do have the two-level filing cabinet, and it is packed. I can't stand to even look in it, but there are some things that you do need to keep this way. So it's good for things that you need to access regularly, like credit card bills that you got paper, not email. Different things, your insurance policies, different things like that. It's a good thing to have those in a regular filing cabinet. Computer files, you can scan things into your computer and save them, but you need to make sure that you back them up regularly. I personally keep an extra hard drive. I built my own computer, so I put an extra hard drive in my computer that is strictly for backing up my regular hard drive. And so anything that I put in there every morning at 9 o'clock, it gets backed up. And then that way, if my hard drive were to fail, I have everything that I've ever scanned, and it's all in there. Anything that I have on my computer will be backed up on that. There's other things that you're going to want to keep in a safe deposit box. These would be valuable records like maybe birth certificates, marriage certificates, and other documents and things like that. You can also put expensive things like, I don't know, like jewelry, different things like that. All right, financial statements. Financial statements are like a snapshot of your income and spending. So here's an example of a balance sheet. This is one type of a financial record, and I don't remember if I actually have. Nope, I didn't put the answers in there, so I'm going to type these in for you. So here's the steps to creating a balance sheet. The first thing you want to put in there is your income. Okay. Step one, figure out what your income is. So it's going to be anything, or your, oh, I'm sorry, not income. I'm looking at the wrong one. This is your assets. I thought we were doing net worth. Okay. Balance sheet, you're looking at everything that you own. Okay. Anything that you own of value. You've got, where's my pointer? Here we go. Any cash that you have, money that you have in your checking account, savings account, things like that. Any investments that you have, these are all assets. If you have a retirement plan, this would be an asset. Your home, cars that you own, any other personal property that you own. So you own a boat or an ATV, anything like that. So you add up all of that, and this is everything that you own of value. These are your total assets. Okay, the next thing you want to do is list your liabilities. Okay, list your liabilities. You've got two different kinds of liabilities. You've got current liabilities and you've got long-term liabilities. Current liabilities are things that need to be paid off quickly. These would be any unpaid balances, your credit card bills, things like that. Long-term liabilities are things that you're paying off. You're paying off as you go, like a mortgage. You're not going to pay off your mortgage all at one time. You're going to pay it off a little bit at a time. Yes, these are the things that you owe. Any money that you owe is going to go in your liabilities. And then finally for 3, you're going to subtract your assets and you're going to subtract your liabilities from your assets, and you're going to see what your net worth is. Okay, so you've got whatever this amount is, 4,200. You're subtracting that from 14,450, and then your net worth is going to be 10,250. Yes, we always want a positive value for that. All right, cash flow statement. Here is what I thought I was filling in. First thing, list off your income. I guess I need to go with smaller letters here. Let me make this a little bit smaller. This is going to be your income. Okay, your income from all sources. This is going to be your job. If you have investments that you get dividends, different things like that, all of your income coming in. The next thing is you want to list your expenses. Okay, your expenses, everything that's going out, all of your bills. You've got non-discretionary and discretionary. Discretionary are things that you can kind of play with. It's not a really set. Non-discretionary is the bill is what it is. Your mortgage is $1,750 or $1,750 each month. You need to pay $1,750 each month. You don't get to say, this month I don't really have a whole lot of money, so I'm going to pay $100. You can do that, but you're going to be paying a fee. So those are the non-discretionary. Discretionary would be things like the money that you put into your savings account, your charitable giving, entertainment, things like that. Those are the things that you can play around with. If you've got less money that month, then you can reduce that amount that you're going to spend on that. And then finally, you're going to subtract your expenses from your income, and that's going to give you your net cash flow. Okay? Give me a smiley if both of those made sense to you. All right. Okay. Moving along, we've got budgets. Different types of budgets that we have. Everybody's in different situations, so you want to pick the type of budget that works for you. For most high school students, a mental budget is all you need. You don't make a lot of money, you don't have a whole lot of payments that you have to make, a lot of debt, anything like that. So a mental budget is fine. You're just going to kind of keep it in your head what you have to pay. You've got to pay $50 for your phone each month, and you make $100, so you can kind of figure that out. You have $1 million? Oh, I wish. All right. A physical budget would be, you're going to put, here's your little visual aids here. You're going to physically take the money and put it in envelopes. And then as your bill comes up, say you've got a bill for your phone bill, you've got a bill, or I'm sorry, an envelope for your phone bill, an envelope for your electric bill, an envelope for your car payment, an envelope for whatever each of your payments are. This is a physical budget. Now, just a little aside, this isn't really practical because most of the time what you're paying, when you're paying your bills, you're paying with a check or you're paying it online through your online banking. So what you can do, I see Jonathan is saying that that his mom does that. What you can do with this, if you are going to use this, you just want to kind of do a separate step, and what you're going to do is you've got it physically and then you put it in the bank and then you pay the bill. Okay? Another budget that you can use is financial software. This is one that I use. I really like this, and Dave Ramsey is awesome. The financial software, an example of that would be Quicken. You can design your entire budget on here, and it's fantastic because it tells you when something's due, how much it's due. And then a real common one is just a written budget. Somebody takes a piece of paper, they write out how much money they have coming in, what all their bills are, and when it's due. And so these are the 4 different types of budgets that you learned about. Here's some common characteristics for a successful budget. Identify your goals. You really want to know where you're headed. Is your goal to buy a house someday? Then you really want to make sure that you are budgeting. You're not budgeting, you know, $100 a week for entertainment. That's not something that's really necessary. So take some of that money out and put it towards saving. which is another important characteristic, is saving first. Be realistic. If you know that you only make $1,000 a month, don't budget out for $2,000 a month. So you want to make sure that it is realistic. And so these are the 3 characteristics. Another question that you have in your assessments: identify goals, be realistic, and save first.